Welcome to the Deep Dive.
Yeah.
We're going to help you cut through the noise and get to the heart of the matter.
Mm-hmm.
Today we're diving into FEMSA,
Okay.
a Mexican multinational company. You've given us some great sources to work with,
Yeah.
excerpts from their website's history, and a deep dive into their 2005 SEC filing.
Wow.
So let's unpack this and see if FEMSA stock is a good fit for your portfolio.
Yeah, the first thing to understand about FEMSA is their journey. They started as a single brewery in Monterrey, Mexico, all the way back in 1890.
Wow.
It's fascinating to see how they've evolved over the decades, expanding into retail beverages and packaging.
And what's interesting is that even in their early days, there are hints of the innovation that would come to define them.
Right.
For example, in 1903, they were the first Mexican brewery to replace corks with metal caps,
Uh-huh.
streamlining the bottling process.
Right. That small detail speaks volumes about their mindset. It's not just about growth. It's about finding smarter ways to do things. And that carries through to their major milestones, like creating the OXXO convenience store chain in 1978.
Speaking of OXXO, if you've ever been to Mexico, you know they're practically on every corner.
Yeah.
That kind of market penetration is a testament to their success.
Yeah.
But let's not forget their strategic partnership with Heineken in 2010,
Right.
which really broadened their global reach.
And of course, we have to talk about the Panamco acquisition in 2003. That move solidified their position as a major player in the beverage industry.
Now, to really understand if this stock is right for you, we have to look at their financials.
Mm-hmm.
The 2005 SEC filing gives us a snapshot of their performance in 2004.
Right.
And there are some important takeaways here.
The first thing that jumps out is their total revenue, 8.43 billion US dollars.
Wow.
That's a significant increase from previous years, and the Panamco acquisition played a major role in that growth. But revenue is only part of the story. We need to look at profitability.
And that's where operating margin comes in. It tells us how much profit they make for every dollar of sales. In 2004, their operating margin was 14.6%, which suggests they're managing their costs effectively.
Exactly. And while a high operating margin is generally a good sign, it's crucial to compare it to previous years to spot any trends. You also want to see how it stacks up against their competitors.
Now let's talk about market share. FEMSA is a dominant force, particularly in Mexico and Latin America.
Yeah.
For example, Coca-Cola FEMSA was the largest bottler of Coca-Cola trademark beverages in Latin America and the second largest in the world in 2004.
That scale gives them significant leverage in negotiations with suppliers and distributors. And when you combine that with the market dominance of their OXXO stores, it's clear they have a strong competitive position.
But past performance doesn't guarantee future success. So let's turn our attention to their innovation pipeline.
Okay.
This is where we assess their ability to adapt and stay ahead of the curve. And their history is full of examples of this, even going back to those early metal caps.
In 1978, they introduced Brisa Mexico's first light beer, showing their ability to anticipate consumer trends. And in 1977, they innovated with two-piece cans to prevent leaks, improving the customer experience. These examples, though seemingly small, highlight their continuous pursuit of improvement.
Now, the Panamco acquisition in 2003 wasn't just about expanding their reach. It was a major strategic move. But acquisitions come with challenges. The SEC filing actually highlights some of the risks they faced, such as economic and political instability in certain operating regions.
Right. Those are factors investors need to carefully consider.
Right.
And it brings us to a key question. What are the pros and cons of owning FEMSA stock?
Right.
On the positive side, you have their strong market position, solid financial performance, and a history of innovation.
But on the flip side, there are those economic and political risks we just discussed.
Right.
And we can't forget about competition.
Right.
Even dominant companies face pressure from rivals.
Yeah.
It's a balancing act, weighing the potential rewards against the inherent risks.
And speaking of rewards, let's talk about their dividend policy and share buybacks. These can be important for investors seeking income or increased share value. The 2005 SEC filing indicates that FEMSA has a history of paying dividends and aims to distribute an amount roughly equal to or greater than 1% of the market price on the declaration date.
That consistent dividend policy can be attractive to certain investors, and they've also engaged in share buybacks, which can boost the value of remaining shares. But it's important to remember that these are not guarantees. They depend on the company's financial health and overall strategy.
Now let's move on to ESG factors, which are increasingly important for investors who want to align their portfolios with their values. FEMSA has a decent track record in this area, particularly when it comes to water sustainability.
The FEMSA Foundation, established in 1988, focuses on education science and technology for the preservation and sustainable use of water. And in 2005, they opened IMER, a PET recycling plant with the largest capacity in Latin America. These are positive signs for ESG-conscious investors.
So is FEMSA a good fit for your portfolio? We've laid out a lot of information, but there's still more to consider.
Let's shift gears and delve deeper into their valuation and the long-term economic impact of their operations. Stay with us as we continue this deep dive into FEMSA.
So when we look at valuation, we want to determine if FEMSA stock is priced attractively in the market.
Yeah, that's a critical point because even a company with great fundamentals could be a bad investment if the stock is overpriced.
Exactly. And unfortunately, our 2005 SEC filing doesn't give us specific valuation metrics like a price-to-earnings ratio or price-to-book ratio.
So how can an investor approach this crucial aspect of their research then?
Well, you would need to seek out more recent financial data and analyst reports to find those valuation metrics.
Okay, so that makes sense. Comparing those metrics to industry peers and looking at historical trends would give a better sense of whether the stock is a bargain or not.
Exactly. And then let's take a broader view and consider FEMSA's economic impact beyond just their financial performance.
Yeah, it's important to understand the role they play in the communities where they operate.
Absolutely. FEMSA is a significant employer in those regions and contributes to the local economies through job creation and tax revenue.
And as we mentioned earlier, their social responsibility programs, particularly their commitment to water preservation, are important factors to consider.
Right. And speaking of water, the 2005 filing mentions that FEMSA Cerveza and Coca-Cola FEMSA obtain their water directly from municipal water companies and by pumping water from wells.
Okay, so that reliance on a key natural resource like water is something investors should pay attention to, especially with growing concerns about water scarcity.
Absolutely. It's worth digging deeper into their water management practices and how they're mitigating potential risks related to water availability.
Now let's circle back to those pros and cons of owning FEMSA stock.
Okay.
We touched on them earlier, but it's helpful to recap for clarity.
Right on the plus side, we see their market dominance, their solid financial performance in 2004, their consistent dividend policy, and their track record of innovation.
Those are all very compelling reasons to consider this stock, but we also need to acknowledge the potential downsides.
Of course, the economic and political risks in some of their operating regions are definitely concerns.
Yeah, and currency fluctuations could impact their earnings when translated back into U.S. dollars.
Not to mention the competitive landscape, even as a market leader. FEMSA isn't immune to pressure from competitors in the ever-evolving beverage and retail industries.
So weighing those pros and cons against your own investment goals and risk tolerance is key. There's no one-size-fits-all answer.
Exactly. Now, before we wrap up, let's touch on those dividend and share buyback policies again. These can be attractive features for certain investors.
Especially those seeking regular income or a potential boost to their share value.
As we saw in the 2005 filing, FEMSA aims to pay dividends that are at least equal to 1% of the market price when they're declared.
And their history of share buybacks can be a sign of confidence in their future prospects.
However, it's crucial to remember that these actions aren't guaranteed and can change based on the company's financial performance and strategic priorities.
Right, investors shouldn't rely solely on past dividend and buyback history, but should look at the company's current financial health and future outlook.
Now, shifting gears to those ESG factors, we've already talked about FEMSA's commitment to water sustainability. But let's also consider their social impact.
Yeah, it's essential to understand a company's treatment of its employees and its impact on the communities where it operates.
While the 2005 filing doesn't provide extensive details about their employee relations or community engagement, you can find more information on their website in sustainability reports and news articles.
So transparency is key for companies that want to appeal to ESG-conscious investors.
Absolutely. Now let's take a brief step back and revisit FEMSA's history.
Okay.
It's truly a remarkable story of growth and evolution.
They've come a long way from a single brewery in Monterey to a multinational corporation with a diverse range of businesses.
Their journey is a testament to their entrepreneurial spirit and their ability to adapt to changing market conditions.
And their active involvement in mergers and acquisitions, as we saw with the Panamco deal, has played a significant role in their expansion and market dominance.
However, investing in any company, especially one like FEMSA that operates internationally, requires a thorough understanding of the broader economic and political landscape.
Right. The 2005 filing mentions some of the economic and political risks associated with operating in certain regions. But those risks can change over time.
Exactly. You need to stay informed about the current economic and political climate in the countries where FEMSA operates to assess the potential impact of those external factors on the business.
Because even a company with strong fundamentals can be affected by unforeseen events or shifts in the global economy.
Now let's talk about FEMSA's management team. They play a critical role in guiding the company's strategy and driving its success.
The 2005 filing provides some insights into their board of directors and key executives, highlighting the experience and expertise of their leadership team.
That's a reassuring sign for investors, but it's worth noting that management teams can change, so it's wise to stay updated on any leadership transitions and understand how they might impact the company's direction.
Okay, before we move on to our final thoughts, let's talk about corporate governance, the system of rules, practices, and processes by which a company is directed and controlled.
Strong corporate governance is essential for ensuring ethical behavior, transparency, and accountability.
While the 2005 SEC filing doesn't go into great detail about FEMSA's specific corporate governance practices, you can find more information on their website in their annual reports and in corporate governance reports.
It's worth noting that corporate governance standards and practices can vary between countries.
So investors should be aware of those differences when evaluating a multinational company like FEMSA.
Now, as we conclude this deep dive, let's leave you with some key takeaways and some food for thought.
We've covered a lot of ground from FEMSA's history and financial performance to their market position and ESG factors.
But the ultimate question remains, is FEMSA a good fit for your portfolio?
And the answer, as always, is it depends.
It depends on your investment goals, your risk tolerance, and your own assessment of the company's strengths and weaknesses.
We've equipped you with information and insights to make an informed decision.
But remember to do your own due diligence, research FEMSA further, and consider how it aligns with your investment strategy.
Now, before we sign off, we want to leave you with a final thought.
We've seen how FEMSA has evolved and adapted over its long history, but the business world is constantly changing.
That's right. And for you as an investor, the key question is, can FEMSA continue to innovate, anticipate future trends, and stay ahead of the curve?
Their track record suggests they can, but only time will tell if they can maintain their success in the face of new challenges and opportunities.
That's the essence of investing, assessing a company's ability to navigate an uncertain future.
It's a journey filled with both risks and rewards, and we hope that this deep dive has provided you with the knowledge and confidence to embark on that journey.
If you enjoyed this deep dive, be sure to visit our YouTube channel.
We have a whole library of episodes covering a wide range of companies and industries.
We're always adding new content, and we love hearing your suggestions for future deep dives.
So subscribe to our channel, hit that notification bell, and let us know what you want to learn about next in the comments section.
Thanks for joining us on this deep dive into FEMSA. We hope you found it valuable.
Until next time, keep learning, keep exploring, and keep diving deep.
We've covered a lot of ground in our deep dive into FEMSA. But before we wrap up, let's bring it all together and highlight the key questions you should consider as you evaluate this company for your portfolio.
Yeah, the first and most important question is this: what are your investment goals? Are you looking for long-term growth, or are you more focused on generating income through dividends?
Yeah, your answer to that question will significantly shape your decision. Next, you need to honestly assess your risk tolerance. Are you comfortable with the inherent risks of investing in emerging markets?
FEMSA's performance is undeniably tied to the economic and political stability of the regions where they operate.
And speaking of regions, consider your geographic diversification. Does adding a Mexican company like FEMSA make sense for your portfolio, or are you already heavily invested in Latin America?
Right.
These are all critical questions to ask yourself before making any investment decisions. And remember, this deep dive is just the starting point.
We've given you a framework for understanding FEMSA. But the real work begins now. Dig deeper into their financials, analyze their competitors, read industry reports, and stay informed about the economic and political developments in their key markets.
The more informed you are, the better equipped you'll be to make a sound investment decision. If you enjoyed this deep dive, be sure to visit our YouTube channel. We have a whole library of episodes covering a wide range of companies and industries.
We're always adding new content, and we love hearing your suggestions for future deep dives. So subscribe to our channel, hit that notification bell, and let us know what you want to learn about next in the comments section.
Thanks for joining us on this deep dive into FEMSA. We hope you found it valuable.
Until next time, keep learning, keep exploring, and keep diving deep.